Today's Animal Spirits is brought to you by YCharts. If you're trying to help clients make sense of everything that happened in 2025, YCharts just released one of the most useful resources of the year, the charts that define 2025 deck. Instead of sorting through the headlines, you get the charts that actually move markets, the narrowing leadership of megacaps, NVIDIA's multi-trillion-dollar rise, the longest government shutdown ever, and how AI spending rewired productivity, margins, and labor trends, all distilled into simple, client-friendly visuals.
This resource gives you ready-to-use explanations for every major narrative of 2025, helping you cut prep time and deliver clear, more confident conversations heading into 2026. Grab your free copy with a link in the show notes and get 20% off your initial YCharts professional subscription when you start your free YCharts trial through Animal Spirits, new customers only.
Welcome to Animal Spirits with Michael and Ben. As we wind down the year, 2025 has been the year of sliding narratives, I think. Your take, Ben?
Okay, continue.
All right.
I need to hear a little more.
Maybe I should make the case. That's fair. Going into the year, we had deregulation. There was going to be a financial boom. The window for anything, whatever activity you wanted to do, on the table. Let's go. And then we pulled the e-brake going to Liberation Day. And there were quotes. Larry Fink, I believe, said, our customers are telling us that we're already in a recession. Like it was like immediate. So the aftermath of that, which lasted, I guess, through the end of May. I don't know. My timeline's right there. But there was that. And then in the background, of course, there was the OpenAI story and all of their partnerships and NVIDIA hitting $5 trillion and the OpenAI Oracle deal, which sent the stock up 37% in the day. For a minute, making Larry Ellison the richest man in the world. And then Sam Altman going on the podcast and all the questions surrounding AI. Wait a minute, the math isn't mathing, or the sales going to be there? Like, how make this make sense? And now, and then of course the stock market in the background the entire time doing what it did. But now we are, the narrative right now is, I would say, angst about the state of AI. And the disbelief. There is an absolute wall of worry. You saw Oracle report last week. The stock dropped as much as 14% on the day, closed down 10%. You saw Broadcom report last week. Stock got murdered. You saw ServiceNow report or get downgraded yesterday. I didn't read the story, but the stock got murdered. And all the while, meaning today, the stock market is at all-time highs, which is remarkable. So the cap-weighted index, this is from Duality Research. The cap-weighted index is briefly off its all-time high, but the equal-weight index is breaking out in a big way. We had the highest percentage of S&P 500 stocks making new 52-week highs in over 9 months. And this, while the narrative for the last couple of years, which is not entirely untrue, I mean, obviously there's holes to poke and it's to pick, there's nuance here, is that it's only been 7 stocks propping up the market. And so now you see a lot of worry about the future of AI. Is it time to back down from the Mag 7? I say a lot of worry. I mean, there is a lot of worry. You're seeing strategists make the case, and yet the rest of the market is taking the baton.
So
If we were to tell you like weeks ago or months ago that Oracle would be down X%, that Microsoft would be flat, like all of these sort of things, you would say, wow, how much is the market is down? Wrong. Equal weight is at an all-time high. Russell 2000 is at an all-time high. The market,
all country world index is at an all-time high.
So strength is deteriorating. So it is. There has been just a lot of narrative glides over the past 12 months.
I don't think people would have, to your point, would have believed this happened. So Oracle's down 45%, Netflix is down 30%, Costco, which was trading for like 50 times earnings, is down 20%. Meta is down almost 20%, and Nvidia is down almost 15. Nvidia is down 15%. So all these huge big tech names are getting killed, and the market doesn't seem to care.
Remarkable.
It's really surprising, right? Yeah, you're right. Everything's hitting all-time highs right now. And it doesn't matter. Not to mention that the one narrative no one seems to care about that we keep saying is international stocks and emerging market stocks are up 30% this year.
On fire.
Are on fire, going crazy. Haven't given up their lead. Even so, it's...
Can I blow your face?
Let's do it.
I was reading Mark Rubinstein's Substack yesterday, Net Interest, one of my favorites. You know what? This is worthy of dropping this in the doc. I'm going to put a note here so I don't forget. Drop EUFN here. Did you know that European financials I'm fact checking myself here. I look at this asset. I just want to make sure that this is actually true. EUFN, European financials, are outperforming the Qs by a lot over the last 5 years.
What's a lot?
A lot. By the way, a 5-year period. So think about what's happened over the last 5 years with the NASDAQ 100. The NASDAQ 100 is up 105%. Okay? Pretty good.
Okay.
EUFN is up 160%.
Wow.
Now, off a small base, obviously, expectations were in the toilet. Remember, is Credit Suisse the new Lehman? Remember that?
Yeah.
So admittedly, obviously, a very different path to get here. But isn't that wild? Over the last 5 years, outperformed by 50%?
Never would have guessed that. So, so the Vanguard European Stock ETF, VGK, is up 35% this year almost. Crazy. I mean, Europe was literally left for dead. Why would you ever invest in European companies? They're being left behind. This is an AI boom.
Left for dead.
They don't have any technology stocks. It is quite amazing. What's this Microsoft chart? Oh, you shared this on Slack yesterday.
Okay. Things that don't happen in a bubble.
So wait, before we get, so this, to you and to me, this is a great thing.
Oh, I love it.
The market, like these big stocks have taken it on the chin and the market is rising. This is a positive sign. If for it's a market of stock, not a stock market. This is
I love
good
it.
news,
And credit
right?
to me. I tried to buy the dip in Oracle. I sold it on the day that it reported earnings. I lost 10%. No harm, no foul. But I said in our Slack channel, I love it that Oracle is getting the shit beat out of it because the numbers weren't that bad. They really weren't. But the amount of skepticism around these stocks is so good for the market. The governor that investors are putting on these names is massively important.
Whoa. We don't want a bubble here. Oracle going 35% in one day. We don't want that.
Yes.
Let's bring it back. I think this is very healthy behavior.
So combine that with the broadening out. You couldn't ask for anything better. As somebody just looking at the stock market, you could not possibly ask for a more bullish environment. Again, whenever I'm saying this, people are like, oh, Michael's so bullish. No, I'm not. I'm not saying anything about the future. I'm saying today, you could not ask for a more bullish environment, okay?
Listen, if I'm on CNBC, internals are looking healthy right now. Okay?
What was that? Oh,
very healthy internals.
Yeah. Why is that funny? That's true.
I'm just saying, it sounds smart to say that.
Well, but it's accurate. So you're right, it sounds smart because it's true. All right.
That's not something I would say. So that's what I'm CNBC Ben.
Microsoft. I do like CNBC Ben. I was looking at a stock chart of Microsoft relative to the S&P 500. I would say that Oracle, there's a few stocks that are like AI proxies, right? Unfortunately, OpenAI is not public. So we don't know what, and Anthropic and Perplexity, these are not publicly traded stocks. But I think that Microsoft is a pretty close proxy. NVIDIA, of course, is. CoreWeave, to a lesser extent, is probably that on steroids. But I looked at a chart of Microsoft relative to the S&P 500 since November 2023, when ChatGPT launched. It's barely up. It's barely outperformed the market. If you take away like that initial burst of holy cow, this is wild, and whoa, Microsoft owns 10% of this company, or invested $10 billion in this company, whatever it is, it's sideways. It's sideways since April 2023. The biggest or second biggest publicly traded proxy for the bubble has gone sideways relative to the market for more than 2 years. That is not bubble behavior.
Yeah, the S&P's beaten Microsoft by about 10% over last year. It's up 6% over last year.
That is not bubble behavior, right? All of this talk about we're going to get a bubble. Are we in a bubble? Are we in a bubble? This is not a bubble. This is not a bubble. There might be there are areas that you could point to and say that's a bubble. Is OpenAI worth $500 billion? I don't know. But is the stock market in a bubble? No.
I think that's great. I think people are saying we don't want this. We don't want a bubble, and I think investors are fighting back.
It's great.
This is good sign. Still not out of the realm of possibility that it could happen. But I agree. We didn't get to like the crazy stupid phase.
There was an article either in Bloomberg or the Journal talking about investors turning on the Mag 7 a little bit. Yardeni is recommending an underweight. There are a bunch of strategists that are saying 2026 is going to be the year where the rest of the market takes the baton. And retail investors are acting that way. So check this out. This is from the Daily Shot, Vanda Research via the Daily Shot. via the daily chart book. Too many V's. I apologize. Flows show retail investors rotating away from mega cap tech toward ETFs. So
Wait, why did they do Mag 7 X Meta though?
I don't know.
Okay.
I guess, are they buying Meta? Does that make the chart not work? Whatever. Mag 7X Meta flows are rolling over, and all ETFs up and to the right.
That's good news, right? People are looking for value elsewhere.
I think it's great. I love it. I'm here for it. All right. Internals, Ben. All right. Put your CNBC hat on. Got it?
Mm-hmm.
Cyclical This is from Turning Point Market Research. Cyclical sectors are leading the breakout list. For the first time since July, financials, industrials, and technology simultaneously saw at least 10% of their stocks hit 52-week highs.
Okay. I see a lot of green arrows on this chart. That's got to be good.
You want cyclical stocks leading the charge. Okay? And a clean breakout, you don't want to see breakouts led by staples and healthcare.
Now, it doesn't always work like this, but sometimes you get a new year, you turn the page, and people go, why should a new year matter? For some reason, sometimes though that happens and completely. This is what happened in 2022.
It really does.
It shouldn't matter, but it does.
Well, can I tell you something? I'm going on a diet on January 1st, so there you have it. It's psychology.
You should do it on December 31st just to beat the rush. But do you think that it feels like we could get one of those next year, 2026, where everything just changes like immediately?
Yeah. What if 2026 is the year of let's go to two extremes. 2026 is the year of the catch up. Maybe even there's two sides of the same coin. Where we overestimated what AI can do. Salesforce is going to be fine. Adobe's going to be fine. All of these companies, ServiceNow, all these companies that were supposedly disrupted by AI, they're the catch-up trade. And all of the beatdown that they took in 2025 is going to reinflate in 2026. And simultaneously, more air will continue to come out of the AI trade.
Well, I would love to see if we're going to look at positive AI trade, I would love to see the fact of other companies that are benefiting from it. I don't remember what podcast I'm stealing this from, but C.H. Robinson has been going crazy. And I had a friend who worked for C.H. Robinson for a while.
I have to be honest, I don't know what that stock is.
So they're a logistics company. Okay. And they help match truckers to routes, and they've been using AI to totally speed up their process. And if you look at the chart of this thing, it's going vertical. It had like a 20% update, and the reason is that AI has allowed them to shorten the length of time that it takes them to match a truck driver with a shipment. And
is this stock in the doc, or you just want me to pull up the chart?
Oh, I didn't put it in the doc. Just pull it up. But I would love to see. So this is a $20 billion company almost. But I would love to see the AI trade broaden out to more companies like this, where they're using it. And I think that would be a good thing if these small and mid-cap names started getting some positive spin from AI, and not just the Mag 7. I think that would be helpful.
The stock is working. So I don't have this in the doc, but the earnings expectations. Oh, I saw this morning actually in the daily chart book. They have a chart showing the earnings of the Mag 7 and the 493 or something like that. The Mag 7 and the Equator, the Mag 7 and the Russell 2000, whatever it is. And the Mag 7 is constantly double digits, like 15 to 20%. But the earnings expectations for these other companies has been rising higher every year. And Jerome Powell did say something about productivity gains from AI on the presser last week. I do think that it is very much in the realm of possibility where you see further margin expansion among these small names seeing increased productivity. And this is part of the economic story.
So the only reason that I'd be slightly bearish on 2026, if you wanted to put your market strategist hat on, look at the returns that the S&P has had lately. It's unreal. And obviously the NASDAQ 100 has been better. This decade alone, up almost 20, up almost 30, down 18 in 2022, up 26, up 25, up 17 so far. Like, the returns have been spectacular. So the hope would be, hey, listen, the S&P is going to lag, but equal weight and small caps and mid caps and international will pick up the day. But that's the thing where you go, the returns have just been otherworldly for a long time now.
Yes. And also, I do believe, now this may be bubble talk, but I am a believer in this AI story. I do think that is a line of demarcation. So I don't think the 31% return in 2019 has literally any bearing whatsoever on the stock market in 2026. Like, none whatsoever.
Anything pre-2022.
Yeah, that's a different story. It's a different universe. It does not exist. Now, I understand it exists in the sense that investors have been treated very well, But in terms of how that impacts the valuation and the earnings from back then and today, don't care.
We're going to talk about private companies in a little bit, but it is funny to me that there's been this narrative. You talk about sliding narratives that, hey, listen, you're missing out on gains from companies not going public, right? The
Public
Amazon
market
went public.
investors.
Yeah,
Yeah,
Amazon
what a
went public.
joke.
The NASDAQ 100 has compounded at 19.5% per year since 2010. You didn't have to invest in these tiny little companies to enjoy large gains, right? Like, oh, we missed out on Amazon because it didn't go public, and Facebook went public later, and all these companies are going public later. It didn't matter.
I'm so glad you mentioned that. I mean, because that is one of the talking points. And it's not untrue. Yes, we weren't able to invest in OpenAI at a $20 billion valuation because it was in the private markets. Yes, that is a fact. But it is not a fact that investors are being robbed of gains by not having the ability to do that. Because to your point, look how well public markets have treated investors. What, 19% a year is not good enough?
What percentage of VC funds do you think beat the NASDAQ 100 in that time period?
Which time period?
It's in the last 5, 10, 15 years. I bet it's a tiny percentage of any VC funds that beat that.
Less than 10%?
Yeah, I would say like less than 5. All right. Howard Marks, Grand Rapids hedge guy. We should send him a t-shirt. Did you read his latest piece? Is this a bubble?
I read most of it.
Okay. So it's a long piece, and he does the thing where, and some people, you mentioned it, some people don't like this. He does a lot of back and forth on the one hand, on the other hand, right? He says, since no one can definitively say whether this is a bubble, I'd advise that no one should go all in without acknowledging that they face the risk of ruin if things go badly. By the same token, no one should stay all out and risk missing out on one of the great technological steps forward. A moderate position applied with selectivity and prudence seems like the best approach. Now, some people read that and go, come on, man, get off the fence. Make a decision. But I totally, completely agree with him.
Me too.
The people that go to the extremes in these scenarios, that's not a smart position to take, because not only because of the potential financial problems you could have because you miss out on something or you sit out of something, it's the psychological burden that it carries.
I am Team Marks here all the way. Sorry, nobody could see the future. Like, weathermen can't even predict the weather, which is seasonal, right? Like, you should be able to predict the weather, and they can't do it. Sorry if nobody could predict the future about the technology and the world and the stock market. It cannot be done. So if you read this post from Howard and you say, well, thanks a lot, asshole, on the one hand, on the other hand, that's the truth. That's about as good as it's going to get. And I think he did a really good job laying out both points because nobody knows. We'll see.
Okay, what's your NVIDIA chart here from Chart Kid?
So Matt shared this chart with me. NVIDIA is cheaper now versus ChatGPT launch. And he's looking at the NVIDIA's forward PE ratio. And it was 40 times, 39 times when ChatGPT launched. And now it's 24 today. So he's showing multiple expansion or contraction over time.
This is a crazy chart. I never would have guessed this in a million years.
Okay, so this is not what happens in bubbles, but there is a big however here. And the however here is maybe we're looking in the wrong spot for the bubble. And maybe multiple expansion is the multiple is the wrong place to look. It's the market cap. And I think $4.3 trillion goes up to 5. It's such a big number that it loses all meaning.
Right.
And I'm not going to do that if you stack $1,000 bills. Oh, who am I kidding? Yes, I am going to do that.
It goes around the moon 12 times, right?
$4.3 trillion is $1 billion 4,300 times. I mean, it's insane. That is a lot. And so I understand that investors aren't paying more and more for each dollar of earnings, but how could they possibly? What would this company be worth? 13 trillion? It would be more than all of the bonds outstanding at some point. Like, it's just.
I need a Warren Pies chart that shows the biggest company relative to GDP, because we live in a $32 trillion economy now.
It's bigger than Germany's GDP.
Well, okay. I mean, obviously that's a stocks versus flow thing, but I need over time. But yes, you're right. That's a massive thing. All right, I talked about the concentration thing, and you know my favorite thing with the Wall Street Journal, the everyday investors hedging against an AI bubble. Okay, everyday investors are hedging.
What does Tony Wynn say?
Yeah, they're not taking. Brian Hahn had most of his savings in tech stocks for a decade.
Credit to Brian.
It says the 51-year-old math teacher had 80% of them. Now he says he's worried. In October, he took all of that money out and put it into gold. He said it's too much of a risk for me to assume that this was going to keep moving higher, which, that's not a bad idea.
Hold on.
But
Can we just give full credit to Brian Hahn? This guy outperformed the shit out of me probably by 2x over the last 10 years.
oh yeah, he did amazing. Here's my thought process though. I think this whole concentrate, like if you went against all conventional wisdom in terms of reasonable financial advice, investment advice, the kind of stuff that we give, if you went against that for the last 10 years, really the last 5 years though, you did amazing. If you speculated, if you concentrated, if you did all these things that you probably shouldn't do on a regular basis, you won. You made a lot of money.
That's not really true. It's sort of true. It depends
Sorry,
on
a lot of people did.
But
Not everyone.
It depends on which stocks you went all in on.
Yeah. But
if you went in on the Mag 7 stocks, you did phenomenal.
Yes. Oh, yeah. But I think a lot of people did that because it was, hey, I'll just invest in what I know, and it worked. It worked to perfection.
Dude, we talk to them every day. I mean, there are quite literally millions of people, millions and millions. I don't know if it's tens of millions. Maybe it is, probably, that got rich off of Apple.
And I think this
and Nvidia, like legitimately.
I'm staking my claim. There's a high percentage of chance that this is a once in a lifetime thing that just happened. So at Colossus, Dom Cook did this piece, and you sent it to Josh and I about Henry Ellenbogen.
This guy, Dom Cook, is unbelievable.
Yeah, his profiles in Colossus are really good. And this one was about, this guy, Ellenbogen, was the New Horizons fund at T. Rowe Price, which had a really great track record, went back forever, and his returns were amazing. But I wanted to pull out this piece.
So whenever you heard about like T. Rowe's mutual fund investing in private shares,
yes,
it was this guy.
He invested a private investment in Netflix in 2011 when they did the DVD by mail thing. They were going to separate the companies, and Netflix was in real trouble. And he said, "I believe in it." So he got invested in Netflix at like a $450 million valuation.
I think I've told the story before. That was my best trade of all time. I bought puts on Netflix like the week before they reported earnings because I don't remember why I was bearish, but let's just say I had a feeling. And I think I made like 30x my money on that trade.
Because what got slaughtered?
Yeah. The stock gapped down like 30%. That was my best trade of all time. Yes. It's been downhill ever since.
So you would have bought there, it would have been great. So it talks about the whole profile is long, but it's worth a read. It talks about his pattern recognition, and he's thinking through the market. And this part that you pulled out, I thought was worth it. He said he trades his portfolio as little as possible. By the beginning of 2022, it became clear that it wasn't a temporary dislocation, talking about the market. The regime had changed. He went back to his study on compounders. In a normal decade, about 40 stocks compound wealth at 20% per year. In the free money era, 120 stocks had achieved it.
Oh, yeah.
There were imposters in his portfolio.
Unbelievable. That is unbelievable. So hold on one more time. In a normal decade, 40 stocks compound at 20% a year. And in the free money era, it was 120 stocks. Unreal.
So here's my point. There's been such a bigger bucket of stocks that have gone just insane in the past 5, 10, 15 years. I think people are going to extrapolate that and think this is normal. Why would I not do this all the time? And obviously there are people who are coming to us and saying, listen, I know I got lucky. I basically hit the lottery. Help me diverse. So like, we're not seeing crazy behavior from people that come to us, but I think there are a lot of people who are going to take the wrong lessons from this and go, oh, this is easy. I'll just buy the stocks I know. I'll put all my money in 5 stocks and I'll make way more money than anyone, and I'll outperform all the professionals.
Yeah.
It's never going to always be this easy.
I trust investors to learn the right lessons over time, individually, not as a group, if that makes sense. Because I think as a group, people will forever buy and hold levered ETFs. It just is what it is, right? Because there's always a new crop of people that need to learn these lessons. But I really do believe that people age and get wise and burn their hand one too many times.
Yeah, you pay your tuition. I agree.
I do think that most people have an evolution of investing where they understand, like, oh, when I was younger, I thought X, Y, Z, and now I understand the truth. So I am bullish on investors learning the right lessons over time.
It does happen. You mature, different things come into your life, and you have more responsibilities, and you have more money, and
less time for speculation, less self-delusion that you're going to do it.
Yes, but there always have to be some losers in the market. Like, that's an unfortunate reality, that there's always going to be people who make mistakes, and some people never learn their lesson.
True.
We know this.
Of course.
But yes, you're right. More people than not probably do learn their lesson over time. But I think this is a lesson people are going to have to learn, that eventually there's going to be a scenario where just the best, biggest stocks that you know and own, you can't just own those and it's easy. It's been too easy. That's the thing. All right. It was jobs day today, I guess. Man, how's your dog liking the new neighborhood?
She's patrolling. What's out there?
Do you ever go to yourself? Because our dog,
Roo!
do you ever just go to the dog like, what are you doing? Like when your dog barks at something that's irrational, or like, do you ever just look at the dog and go, what are you doing? Why are you doing this? I do this to my dog all the time. What are you thinking?
So I have a boxer, and large dogs are not prone to like barking that much. Now there's a dog outside the window that she's barking at, but thank God she's not a chronic barker. But of course, yes, it's like stop, 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 stop. Watch this. Enough.
My dog, for whatever reason, watches TV. So when we're trying to watch a movie or TV, if another dog shows up on TV, she'll like watch it like she's looking out the window. And she thinks and she goes crazy if she sees a dog on TV.
Wow. By the way,
So
is it bad? Like the noise? Can you hear it that clearly?
You can hear it, but we'll talk over
Okay.
it. That's fine. I'm used to it. It's like a baby crying. If it's not my baby, I don't care. If it's someone else's dog.
Let me close my door.
All right, let's talk about the labor market. We got some data today, and it's funny. I put the unemployment rate data from YCharts in here. It shows the unemployment rate by month. Look at the October. It's just blank, which is kind of funny. But you'll notice every single month the unemployment rate is going up, and it's gone up 50 basis points since June. So 4.1, 4.2, 4.3, 4.4. Skip a month, 4.6. On an absolute basis, the unemployment rate is still very low. It's obviously going in the wrong direction. Matt Bosler tweeted this morning. He had another one that is kind of pushing the recessionary bounds. The U.S. unemployment rate at 4.6% is up half a percentage point over the last 5 months. In 77 years of data, the number of times that's occurred outside of a recession can be counted on one hand. And it's like the 1950s and 1980s, and hasn't happened since 2003. Sometimes I think we take these things too far. I saw multiple people on Twitter today post the unemployment rate out to 3 decimal points, right? To show how far we had to, because we're rounding up to 4.6. It's really 4.5746 or whatever. That's a little too granular for me, for a word I don't like to use. Here's the thing.
I still don't know why the granular is a word that is like in your box, in your penalty box.
I used to work with a guy who would use it to sound smart.
Okay.
And there's certain words people use to sound smart, and that's one of them that has always triggered me for some reason.
Okay, fair enough.
He used it all the time. All the time. And it used to just grind my... So
no,
that's
but that
why.
should grind your gears, because granular is not a daily word. Like
No. Would use it all the time.
I probably use it once a quarter, tops.
Yeah, because someone uses that word and you go, that's a smart person, yeah. So here's the thing. The labor market obviously continues to deteriorate. You can't say like it's in a strong place. Stock and bond markets don't care at all. Spreads are still low. Bond markets, you'd think if the bond market was really concerned about the labor market, yields would be falling more. I guess it's maybe you say, well, yields are lower than they would be because of all the tariff inflation stuff. So it is. But the stock market, again, is at all-time highs. Financial markets do not care about the labor market yet.
That's correct.
Just when are they going to care? What would it take?
That is a good question. I think the market will care about the labor market when it's worried that it's going to show up in earnings, but I don't think it's worried about that at all.
Yeah, again, because it's happening on the margin.
But the opposite is true. I think that the labor market is not in a great place because companies are being slow to hire because they're waiting to see what AI is going to be able to do for them.
I guess you could also say, listen, the fact that corporations are laying people off and we're not in a recession means better profit margins for them. That's why the stock market doesn't care. I mean, that works to a point, obviously.
Yeah.
All right. There was a piece.
I also, hold on, one last thing of this. I also think that the consumer is fine. Not to beat this dead horse right into the ground, right? The K-shaped conversation. But in the aggregate, okay? In the aggregate. Because I'm looking at, and I don't know that the stock market is always a source of truth here, but I think in this case, I'm going to lean on it. Ally Financial. Ally is a large automotive lender, and a large percentage of their clients are subprime borrowers. Capital One, pure consumer exposure. Look at this. I mean, the stock is at an all-time high. I'm not like obviously American Express is the luxury client that's at an all-time high too, but just Capital One and Ally is good enough for me. If the consumer in the aggregate, not segments of the consumer, but in the aggregate, was deteriorating, the stock would not be at an all-time high. Duh.
So can I give you something that's the opposite of the K-shaped? It's like a K upside down. I don't know what that is.
It's a
Backwards K. All right. So there's this piece for the Center.
Ks are symmetrical, so an upside down K is a K.
Oh, backwards K. No, that's still the same thing. Center for Retirement Research at Boston College wrote a piece about inflation, and they say, listen, just because inflation's low, and this is the point everyone's been making, let's look at cumulative. And they did this chart that shows all these different categories since 2020. And it shows total inflation is up 25%, like cumulatively. But if you look at food and beverages, are up a little more, 26. Housing is up 28, and transportation is up 37. So those are the big things people focus on, and so the fact that those three items are up more than the average, people don't look at, well, education is only up 4%, or recreation is up 16, or medical care is up 11.
A one-way ticket.
Apparel's up 13, right?
A one-way peak ticket into New York City from the Long Island Railroad is $14.
Okay, what would it have been before the pandemic? I have no baseline for this.
8, 7, or 8.
Okay.
It's crazy. It's unbelievable how expensive it is.
So do you pay every time, or do you pay for a monthly?
I pay
pass?
One way because I'm only in once a week.
Okay.
And but $14 for a one-way peak ticket.
So how much does a monthly pass cost for the train if you're taking it every day?
That's a great question. It used
$500. I have no.
It used to cost. I don't remember. It's been so long since I bought a monthly ticket. It used to be like $200 something. So peak is $14.50. How do we get a monthly?
Yeah, but the good news is
monthly. Let's say the December monthly ticket is no longer available. You can buy the January monthly ticket on or after December 25th. All right, so sorry, I can't find out.
But the good news is you still have to own a car, so that makes it all worth it.
Right? Because and cars are cheap.
But so listen,
man, you should have seen the waffling I was doing this week about my car, Ben. The back and forth, it's out of control. It is.
When do you have to make a decision?
It is heating up. My car is due in April. My lease is up in April.
Okay, you've got some time then. Get your car broker to work. But this piece also looked at the wages, and again, overall wages have grown 2 percentage points faster cumulatively. But look at it's still crazy to me that the lowest quartile had by far the biggest increase in this period. 30% versus 25%, and the highest actually fell behind inflation. Yeah, the highest quartile was only up 24% versus 25%.
If you could poll the audience, if you could ask every American, and let's just throw away the Electoral College, just number of votes, majority wins, majority rules. Would you prefer where you are today in terms of your income and the inflation, or would you rather go back to 2019? Handily, not even close. We go back to 2019 prices. If we could just reset, not even close.
But would people be happy going back to those wages? That's the thing. Would the loss aversion?
Yes, I'm saying your wages go backwards and the prices go backwards.
I think people would say that, but if you actually did it to them, they'd go, they'd be shocked that their wages are gone down. I think that's the problem, is that it's whatever the loss aversion is, that's the thing that hurts more.
Well, that's a different conversation. You might be right about that. But I just say if you just take a vote, if you ask people, stay where you are today or roll prices back, your wages and the inflation, roll it back. I think the majority of this country votes to roll it back.
I've been thinking as obviously technology is going to become a bigger part of our lives, and there's going to be robots, and there's going to be self-driving cars, and AI is going to do God knows what. You know the movie The Village?
Sure do. I saw did I see it in the theater with my dad?
Yeah.
100%.
Yeah, my wife and I saw it in the theater. I think we were still dating at the time. And credit to her, she predicted the ending before I did. But do you think
that's one of my, I don't know if that's a weakness of mine, like predicting the ending. But I don't do that in my brain. I don't try and predict the end.
Okay, I constantly try to predict what's going to happen. That's all I do. So I'm watching the Shiv Roy kidnapping show on Peacock. I'm sure your wife watched this. It seemed like a Robin show.
She did watch it.
Called All Our Fault. Okay. And the whole time, all I'm trying to do is guess who did it. Because I know that in the first 5 or 6 episodes, they're gonna show me the person and make me think it's them, but it's not them. I know it's not them. I don't get invested because I know it's not them. So I got to think who's the person they're not trying. So anyway,
I'm blessed with the burden of not. I don't think ahead.
Okay,
I don't think ahead.
But getting back to the Village thing? Like, it's these people who live in modern times, but they decide to go live like it's the olden days. Do you think you could ever see someone like that say, like, listen, we're going to go back to when like it
Yeah,
was
the Amish.
like, do you think people would want to do that? I think there's going to be people who are going to go.
What?
You don't think that because you see all this nostalgia for the old. I would love to give people that experience. Hey, for a month, you're going to live like it was pre-internet days and see how you like it. The technology that you had back then. Would people actually like it better?
You can't survive in the modern world because everybody else is using today's technology.
Yeah, but I'm going to create our own little town though, right?
Okay, like in the Truman Show. Or
Yeah,
like
it'll be like a reality show.
Yeah.
All right. So let's talk about AI a little bit. I feel like OpenAI is an obvious short, and the evidence keeps mounting that there's a difference between a good business and a good product.
Let me ask you a question. If OpenAI were public and it's down 40%, do you press the short?
I think at this point you might, because I think Google's gonna eat their lunch. Because OpenAI, I think it's a good product, not a good business. Why aren't they selling ads yet? Like, what are they? So listen to this. This is from the Wall Street Journal. OpenAI is already doling out far more stock-based compensation than other tech companies, owing to an intense talent war that is waging with its competitors. The company expects to spend $6 billion this year on such costs, almost half of its projected revenue.
Okay.
Repeat that. Half of the revenue is going to employee stock options.
Don't care. So
I don't think this is a well-run business, and I think this is an obvious short. Tell me I'm wrong.
Okay. I won't tell you you're wrong. Let's just consider the other part of this. There are so many parallels to earlier businesses. Facebook can't monetize social. Netflix can't do this. You're evaluating the business of a baby business. It's foolish. They're in building mode. Like they're not in the monetization at all ends mode. I can guarantee you they don't know what their business is yet. And the OpenAI business, whatever it's going to be, does not exist today.
But guess who does? Google does. Meta does. Like these companies already know, listen, we're going to sell ads up the ass on this stuff.
Okay,
we don't care.
But you don't
Why aren't they doing that?
They're going to be. Of course they're going to be. Right now, they're trying to build the best product in the market and they're winning. Yes, Gemini is growing a lot, but ChatGPT is still totally dominant in terms of the number. I saw Shkreli posted a tweet this morning, actually, that I saw about the number of minutes on ChatGPT versus Gemini. And you know what? I don't need to guess. Let me just, because this is important. Bear with me. Martin Shkreli, Twitter. Okay. So 55 billion minutes spent on AI sites last month. 64% ChatGPT, 15% Gemini. Now, Gemini grew 391% year over year. Massive, catching up. ChatGPT only grew 54%. But ChatGPT has
first mover
64%.
So first mover advantage gets them locked in for a lot of people.
Yeah, so I think, listen, I understand it's the obligations of OpenAI look insane. The business model today looks insane, but I'm not getting involved in those discussions of the revenue today, the business today. It's so early to judge. It's not fully formed. Give it a minute.
I just wonder how long the market will give it though.
It's already down 40% in my brain. I don't know.
All right.
Okay, so all right, another one. Like AI adoption rates by corporate customers are slowing. Don't care. It's so early. This to me this is utter noise. Utter noise. Alex Kantrowitz in his Substack wrote, enterprise AI is the fastest growing software category in history. Expected to bring in $37.5 billion next year, up from almost zero in 2022. This is going to be a $100 billion category.
That is pretty nuts. It's funny. So I've said a few times, and you always get mad at me. I said like people in Bitcoin and gold were right for the wrong reasons, right? I
just think it's
no, but I'm saying you can apply this to stock market investors too. We were all right for the wrong reasons. No one predicted AI was going to come in 2022 and change the game so much. Like we didn't. So I'm saying everyone is like that. All right, so let's talk about
point this out. So Gavin Baker was on Patrick's podcast, and I understood. I don't know. 15% of the conversation like resonated with me, right? Gavin is talking
when they start talking about the different types of chips and the GPUs and the TPUs and
no idea. But a few things resonated with us that we pulled out. So, Patrick asked him like, "How do you like take me into your office? Like, what are you actually doing with these things?" And Gavin said, "I think the first thing is you have to use it for yourself." And I would just say I'm amazed at how many famous and investors are reaching really definitive conclusions about AI based on the free tier. The free tier is like you're dealing with a 10-year-old. So I was paying $20 a month for ChatGPT, like the whatever version to pay
Yeah.
to unlock it. And I said, hey, wait a minute, that's such a good point. Like, it didn't even occur to me to like pay $200 a month. So I'm curious, like, what does $200 a month get you? And the first query that I typed in, I laughed at how it's apples and oranges. Like the $20 a month version is magic. This is like a whole other universe. It's night and day between the $20 and the $200 version. Now, am I suggesting in any universe that the $200 version is going to be like mass adopted? Of course not. Who needs to pay $200 a month to ChatGPT? Like the $20 a month version is
Do you
just,
notice the big difference?
oh my God.
Okay.
You would not believe, like, just try it and cancel it. Like, you would not believe how unbelievably better it is than the $20 version. So, like, we're making decisions and discussions around, like, what it is today. I can't imagine what this is going to be in 6 months and 12 months and 24 months. Like, all of the change is coming. It's
And the
going
point
to
is, the
change
$200
everything.
model will be the $20 model at some point.
Yeah,
Like,
probably.
it'll, as things get better. Yeah.
Yeah.
That was his point. I mean, obviously, we have to talk about the space centers, data centers in space. He talked about this, and this is the thing everyone pulled out, and this is the clip everyone watched. And it's one of those things where it sounds either brilliant or idiotic, and there's no middle ground, right? It's like, of course you put data centers in space. You can cool them easier because it's cooler up there, and you harness the power of the sun. And other people go, no. How are you gonna take care of these things if something breaks? You have to fly up there every time, and how are you gonna get them there? And who's gonna
not knowing anything? There'll be data centers in space.
And then,
like, why would?
and then
Wait,
the next
hold
day
on. What do you think? Will there be data centers in space? I do.
So the next day there was a story in the Wall Street Journal saying Bezos and Musk race to bring data centers to space. I don't know, man. I mean, what happens if something goes wrong?
That's not your concern.
I don't know what the cost is. I think we can probably improve the technology enough on Earth where we don't have to send them in space.
Listen,
that's my thought process.
Don't you think they've thought of that? What happens if something breaks?
Yeah, but I'm trying to think this through a cost-benefit analysis. In the next 10 years, when we have data centers in space, I'd say probably not. In 15 or 20 years, sure.
All right, so 10 years, you're in line in the sand. I'll take the under on that. I think there'll be data centers in space.
Okay, it seems I can't even imagine that we have what the cost would be, and we have the capabilities to do that.
I mean, SpaceX is going public.
What the hell do I know?
SpaceX is going public. I think that knowing nothing about the company, other than that Elon Musk is somebody that gets shit done, why won't there be data centers in space?
It's space. I don't know. There's a lot of stuff that happens there.
No, I know. I know. The knee-jerk reaction is LOL, like LOL. I get it, but I don't know. Why not?
Yeah, but on the other hand, the theory makes sense. Like, oh yeah, I get it.
Yeah. You cool.
Sure.
You just turn it, the sun's that way, you just turn the other side, you just turn your back to the sun, right? You're good.
Mm-hmm.
All right, here's another one that we took out of the article, the podcast. Talking about Taiwan Semi. Gavin said, a big problem in the world right now is that Taiwan Semi, by the way, we've done this in the past where we talk really fast about people that we know in the industry that we take for granted, that I don't know Gavin personally, but that everybody listening knows them. Patrick O'Shaughnessy, our friend, has a great podcast called Invest Like the Best. He had this guest on this week, Gavin Baker. Gavin Baker is a technology investor. So that's who we're talking about.
And if you miss out on stuff we talk about, we have show notes on our blogs. Go there. There's links to everything.
So Gavin said, a big problem in the world right now is that Taiwan Semi is not expanding capacity as fast as their customers want. Skip ahead a little bit. So I think Taiwan Semi is in the process of making a mistake, but they're just so paranoid about an overbuild, and they're so skeptical. They're the guys who met with Sam Altman and laughed and said, he's a podcast bro. He has no idea what he's talking about. They're terrified of an overbuild. So it may be that Taiwan Semi single-handedly, that their caution is the governor. So I think it's phenomenal that investors are the governor, that Taiwan Semi is. Like, everybody understands that a bubble that gets out of hand eventually pops, and there's collateral damage all over the place.
We have some healthy bubble bottlenecks right now.
Yeah, it's a great way to put it.
I like it. So wait, so are you going to continue paying $200 a month for ChatGPT or not?
I haven't had as much time as I would like to play around with it, but like, so all these audiobooks that I'm listening to, like, I'm using it all the time. And so for the $20 one versus the new one, not that I need this, but the answers that it gives me, like, tell me about the movies that this producer made or whatever. Like, it gives you like immediately, like not just like the name, like a list, but it gives you the list by decade. It gives you the tiles of all the movies that you could like scroll through. Like it's just like next level.
That makes sense.
Do I need to pay $200 a month for that?
Right. Probably not.
Probably not.
Like I said, you're gonna get that eventually anyway. Probably 12 months.
Yeah.
That's what's gonna be the $20. All right. Mike Simonson has a great housing outlook for 2026. Tons of good charts. I pulled a few here. He's for Compass Intelligence now. He says, listen, home prices are probably gonna be flat in 2026. I think that's probably the baseline most people are using. Like we're just gonna have another, and he looked at affordability. So this is price to income ratio. And it's funny. It never got down to the affordable level, like home prices at 3 to 4 times income, but it's severely unaffordable now. And he's saying like it's just going to continue to go down. It's going to get into less affordable territory if housing prices stay normal and incomes keep rising. But look at this. This is home price change year over year, and he shows the top 20 names in the Case-Shiller index. So all of them had huge gains, obviously, and now many of them are going into negative territory. Miami, Tampa, Seattle, San Francisco, San Diego. These are minor losses. Dallas, but some of them are starting to see down prices, which is not bad. Okay, this is the crazy one though. So he shows healthy home equity cushion for homeowners. 86% of borrowers have at least 30% of equity in their home. You can see how this has changed since 2013. In 2013, barely anyone had any equity. And now the vast majority of people have a ton of equity in their house. And the negative equity is essentially zero, which was actually like 15% in 2013. This is the consumer backstop. Even if it's illiquid and it's not like, this is a backstop of some sort for people, for a large number of people in this country.
Absent a financial crisis, yes.
Right. Yes, for sure. Financial crisis.
I was looking at some houses in my neighborhood yesterday because 2 houses hit the market. Not a lot of houses are. 2 houses on the water. So I'm looking at them like just on Zillow. I haven't looked at Zillow in a while. There's a house in my neighborhood that just the price just got lowered by $25K. It's now $1,050,000. I don't know what it started at. $1,050,000 for this house still sounds crazy, but whatever. That's the world that we live in. It is just under 3,000 square feet. It's a fine house. It's been on the market for 200 and because I was like, wait, this house is still for sale. It's been on the market for 229 days.
Wow. That's a long time to have to wait through that. If you bought a new house and are sitting on 2 mortgages or just waiting to sell your house to buy a new home.
Now this, I think this was like a flip. I think this is like an investor that put money into this.
So they need to lower the price.
Yeah, but like this, I mean, obviously we're in a different environment than 23 and 22. But yeah, the housing market is still soft.
And obviously people aren't going to get the prices they want sometimes. I still get the Marco Island houses just because I checked Zillow once when I was there. And every time it's price reduction, price reduction, price reduction. I think in places like that, like I did get an email from someone the other day saying, hey, I'm thinking about moving from a cold place in Utah to Florida and putting in a low ball offer. It's like, it's about time.
You know, as much as, so we got our first snowfall this week. I know Michigan has snowier winters than we do. As much as I hate the bitter cold, and I guess bitter is a relative word. To me, bitter cold is like 20 and below, below 20 degrees, right? That's bitter cold. Where you walk outside and it hurts.
Oh, yeah.
Right?
We've had that for the last 2 weeks. It's been like 12 degrees. But
I like the suffering. I think it's part of the whole thing. Like, I like getting to the other side of it. I love when it starts to thaw out. And I have like a mental calendar, like summer to fall, all that sort of stuff. Now I'm hating the winter more and more as I get older because that's, the circle of life. Everybody likes the cold a little bit less each year. At a certain point in my life, I'm sure I will be done with the cold, like every other Long Island Jew who moves south. But for now, I still
this must be
us
reaching middle age at the same time. I find myself liking the winter more and more.
Oh,
so
really?
I take my dog for a walk every day, and it's freezing out. And I bundle up, and I put my long johns on, I put my big boots on, and I make my son come with me too. Hey, put your snow pants on, put your coat on, you're coming with me. And we take the dog for a walk, and it's freezing. We can see our breath, and it's something about it is like invigorating. Being out in that type of weather.
Good for you. Am I a bad dog? I don't walk my dog enough.
My dog, if I don't take my dog for a walk every day, she goes by the door and barks. Like she barks at me until I take her for a walk.
Okay.
Once a day I have to take her. And yeah, the kids think they take her for a walk. No, it's me. And they wonder why the dog likes me the most. They say, "You're always mean to her. Why does she like you so much?" I'm the one who takes her for a walk. That's right. Let's talk
I
about
went,
Semblus a little bit.
hold on, before we get to Semblus, this just popped in my brain. I walked downstairs this morning, and Rue was laying on Kobe, very, very sweet. But I walked downstairs. I said, "Are you watching Blank Check again?" He was watching
Oh, yeah.
Blank Check again.
Nice.
That's
Man,
one
what's
of
the
his
taste?
rewatchables.
All right, so Michael Semblus from JP Morgan had a 50-page piece. I guess he does a deep dive in alternatives every year. And he did this one on private markets, what his most recent piece. And I think the biggest one for me, there's a ton of charts here that we can pull, is
What's your
just that
single biggest takeaway?
he looks at the speed of monetization of these buyout funds. How quickly are they turning their investments into money for their investors? And it is slowing considerably. And it says the median percentage of value remaining to total. And it's going up and up and up. And it right now, from even the 2016 vintage, it's like they've only monetized 30% of it. And in the past, it was a complete opposite. You were monetizing 70% of it by this point. So 10 years into a fund, and you've only gotten 30% of your money back. That to me is the biggest thing, that they're sitting on such longer investments in these private markets, and they're not having exits. So the investors have to be getting worried about this.
Yeah.
Like, where's my money? Come
Yeah.
on.
Yeah. Well, onto the Wealth Channel. I mean, it's no mystery. Like, part of the reason why they're looking for our pockets is because institutional investors they're allocated already. This is a great line in here. I didn't realize it. This was so obvious. Like when I read it, I was like, oh yeah, duh. But I just had never seen it put this way. Since accredited investor thresholds aren't indexed to inflation, the share of qualifying households rose from 1.8% in 1983 to 22% in 2022 and is on track to hit 30% by 2030.
It is kind of funny how the government indexes some things to inflation, but not other things. This would be one that you'd think they would, but I guess it just allows more investors to invest in this. I'm sure the private investment managers love this.
Yeah,
It gives them a bigger pool of people.
The monetization stuff is incredible.
So what changes this? What makes it so there's more exits? There's more IPOs. There's more M&A going on. Why aren't we seeing it? When is it going to happen? What's going to cause it? Because we've had a boom in speculation this decade.
Yeah.
Don't you think that boom would include IPOs? Why hasn't it?
I think my knee-jerk reaction, I have to think more critically about this and would love to hear people who have a better answer maybe. I think the reason why the pool of capital is so much bigger, it's a lot easier for money to come back to investors when the pool of money is $200 billion. When it's 3.1 trillion, I'm making up both numbers.
Not a scarce resource anymore.
There's just too much money maybe here.
There's so much demand there's so much more trading going on in the equity markets by retail investors. And I know the IPOs aren't going crazy when companies do come public, but don't you think there's demand by investors to try something new? I just don't understand why there's not a new IPO on Robinhood once a month.
IPOs are also a much, 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 much smaller segment of exits than M&A. Like, I don't know if it's 10 to 1, but maybe even more than that, actually. Most of the time it's M&A. To me, another big takeaway, and I knew this, but venture is just a waste of time. Fourth quartile venture managers have been a money pit, destroying substantial value relative to the equity market every year since the late 1990s. Listen, if you can get into, so they have a chart here, the top 5% versus the top quartile. Yeah, if you can get into the top 5% of venture funds, and we know who they are, right? It's they persist because they have access to the networks and all that sort of good stuff. I would give them all my money. They wouldn't take it, but other than that, it's a waste of time. It
is crazy because the thought process used to be if you're not in the top quartile, you're out of luck. But even the top quartile numbers here are coming way down and do not look very good at all. That's surprising to me. Yeah. Right.
But look at the chart of U.S. buyout performance, like versus the S&P 500. Like buyout's still okay. It's still a good asset class. Like even the median fund has barely underperformed. the index, it's not bad considering how hard it's been to outperform the index.
Yeah, you're right. It makes sense that the returns would be way worse in venture than it would in private equity. Because those are more mature companies and they put some leverage on it, right? You think you get that some sort of equity return.
And the number of legitimate the manager earlier from T. Rowe Price, he has a weird last name that's escaping me. Said that the number of imposter companies, like there are too many imposter companies in venture. In
Right.
buyout, when the average EBITDA is whatever, $250 million, like those are real companies. Right. And if you buy with some leverage, yeah, you're gonna perform fine. And that's basically what happens.
All right. I want to talk about reading. I think if I had to say one thing that helped me in my career early on more than anything else, it'd be reading. Now, look, have you seen this chart from the FT flying around?
No.
Percentage of U.S. teenagers who read in their leisure time, and it basically it goes from almost every day to was 35% or so in the 1980s. Now it's down to 15%. Hardly ever went from 15% to almost 50%. Now, I do want to take a little umbrage with this chart. Did you have a lot of friends who were reading in their leisure time?
No.
I guess you could say, listen, I mean, I was reading Sports Illustrated in my leisure time. I was not reading books.
No.
I don't think I had one friend in high school who read books on their leisure time.
I didn't start reading in my leisure time until I was 25 years old.
That's probably pretty similar for me too. But how do you square this with the fact that people are probably reading more stuff than they've ever read in their entire lives? It's just not books anymore.
That's what I was going to say.
It's emails, it's newsletters, I mean, obviously, here's my way of thinking about this. Because I'm having a tough time squaring this with the fact that I talk to a lot of college kids. They reach out for career advice. I'm always happy to take those conversations. These kids are 10 times more knowledgeable and prepared than I was. They know the industry. They know the kind of company they want to work for. They know the markets. When I graduated, these are like juniors in college. I knew none of that. I remember I was in a class and someone asked, how many people want to work in investment banking? And half of us put our hand up like, yeah, that's like the best money. And then the teacher goes, what do investment bankers do? And one guy in the class knew it. All of us are like, hands slowly down. Now, almost every kid knows that because it's easier to research these things. So the reading was had the biggest impact on me more than anything early in my career. It's how I caught up and I learned what the markets were and history and all this stuff. But I do think that with podcasts and newsletters, and if you want to, there's more opportunity than ever to know what's going on. I just think it's probably like inequality.
There's different ways of learning these days.
Yes. I just think the extremes, if you're someone who just gets caught in the slop of, I just watch TikTok all day and I scroll through social media and I doom scroll and all this stuff, yeah, your brain is probably turning into mush. But if you take advantage of the information, it's so much better today than it was in the past. I just think that the inequality of learners is probably going to be wider than it was in the past even. That's my thinking. All right. The New York Times had this piece. Streamers are raising prices at an astonishing rate. Here's how much more you're paying. And they go through all these lists of every streamer. And I was looking for a table and I didn't have one. So guess what I did? I put it into ChatGPT or Gemini, I can't remember which one, and looked at the price. Disney went from $15.99 to $18.99. Max went from $16.99 to $18.40. And all these raised their prices by $2 or $3. And if you look at since they first started, it's way, way higher. Do you think it really matters, though?
What do you mean?
Are people going to give up because they keep raising prices? Like,
funny,
some of these,
funny you should ask.
Sure.
Bloomberg has a chart showing a rare subscriber increase. U.S. pay TV customers rise for the first time since 2017.
That's surprising, right? I mean, does YouTube TV count or not? Because that's what I use now. I feel like that to me is like basic cable now.
Is U.S. pay TV, is YouTube in here? I don't think so.
Okay. I did the thing where I bundled Max and Hulu and Disney together, and that made it a little cheaper. I think it's like $29.99 a month, but I'm one of the people, I'm never going to get any of these. I'm locked in forever.
Yeah. We spoke about the Netflix, Paramount, Warner Brothers saga. Josh and I are talking to Bill Cohen from Puck.
Or you're going to ask him about Unscripted? He was in there a little bit. He was in the book.
He broke the article open. Like, he wrote the article for Vanity Fair in 2015. Yeah. So, yeah, I can't wait to talk to him. So we're going to talk a lot about the story. Him and Bellany at Puck and Julie Alexander, they've been great on all the reports. So a lot of speculation. Oh, I bought Netflix last week. I don't know if I said this on the show. I did
too. It's down 30%. Every time Netflix crashes, it's a wonderful buying opportunity. Maybe a false forward. Can I make a pitch to you real quick?
Sure.
I think Google should buy Warner Brothers. They have if people, because people in Hollywood are freaking out about this.
That would be blocked.
Whoever buys them, then you could have HBO as a tile on YouTube TV. I think wouldn't that save the studio more than any of these other options?
What do you mean save? You mean save the theaters?
Well, people are worried about what this means to Hollywood workers. That whatever, if it's Netflix or Paramount, a lot of people are going to lose jobs. Wouldn't Google keep the studio?
No. Netflix is not going to be cost cutting. The synergies that are coming from Netflix are coming from Netflix not paying HBO a licensing fee.
Oh, come on. That's the stuff they say. They're gonna cut costs. You kidding me?
No, they're
Netflix?
not. No, they're not.
Yes.
No, they're not. Netflix is not firing everybody. They don't have a studio. What are you talking about? Netflix is not firing. Netflix is not going to axe people the way that Paramount will. Paramount has a studio. The duplicative roles are all gone.
Netflix has got this far without having a studio, though.
No, dude. Netflix is not going to whack Warner Brothers Studio. They're not going to whack HBO.
All right. I don't believe that, but
they're not going to.
I don't believe you. All right. I think Google should buy them. I think that makes sense if you want to keep this stuff going. But
that would never pass muster. There's no way that YouTube would be allowed to buy anything else.
Yeah, I guess so.
Like that would be blocked in a second. Anywho, hold on. What else was in here?
What's this Egyptian theater thing?
So somebody emailed us because we were talking about Netflix is really trying to. Netflix is at war with the theater, and I mean it's not war. Like they won already, right? And so what Sarando said, just to rehash in case people are not following this, what Sarando said, and this is the part that Ben, you should rightfully maybe not believe, that they're going to keep the number of movies coming to the theater. But what he's really going to do is he's going to narrow the window. So if movies were in the theaters for 40 days, he's going to narrow the window to 15, effectively squeezing movie theaters, because if you have to wait only 15 days, you're going to wait and you're just going to see it at home.
Right. And then it's going to be just in the big markets. And then, that's what happens.
Anyway, somebody said, hey, a listener emailed us, Netflix owns the Egyptian theater in Hollywood. And go to this website. This is actually pretty cool. So
it just shows Netflix stuff?
So you could see a bunch of Netflix movies in the theater. I don't know why you would want to see Jay Kelly in the theater, but you could. A House of Dynamite in the theater. Whew, that would piss me off if I went to the theaters for that one.
Oof, yeah.
But I thought this is interesting because I didn't you could watch the Stranger Things finale in the theater.
That'd be kind of cool to see in the theater.
That's kind of cool. So I love that they're doing this, even if it's on a small scale.
That is kind of cool.
I went to speaking of I don't know if this is innovation, but just people people like going to comedy shows because it's better to laugh with people. Like it's good to have some shared experiences.
I laugh way harder at a live comedy show than I would watching it on Netflix.
Of course, you would chuckle at home. Yeah. Maybe if it was like an amazing joke, you would laugh. But laughter is contagious, as is feelings. So I saw The Shining at IMAX. By the way, I bought a ticket for myself. Robin goes, "Are you seriously going to see that on Friday? It's our anniversary." I was like, "Oh yeah."
Oh my God. You went to see a movie by yourself on your anniversary?
Well, my anniversary was technically on Sunday. Or was it Saturday? It was Saturday. No, Sunday. So I said, no, you know what? F this. You're coming with me. It's my anniversary. You're coming with me. She never comes to the movies with me ever. Like the last thing we saw was A Star Is Born. So I said, we'll do dinner. It's 7:00 theater. We'll do an early dinner. We'll go. And we found out that Kobe has a basketball game like on Tuesday. They announced a basketball game on Friday. So I'm like, oh, each ticket is like $30. So I'm like, all right, whatever. And then I'm thinking to myself, you know what? Like, Shining is in IMAX like for one day. Like, I really want to see this movie on a big screen. So I'm like, all right, I'll go to the 9:30 one. So now I spent $90 on The Shining. The Shining came out in 1980, 5 years before I was born. I did not see it in the theater, Ben. It was packed. There was at least 200 people there. And guess what? It was amazing. Holy cow. Seeing that in IMAX versus watching that on your laptop or your TV. I mean, forget about it. What a great experience.
I take umbrage of this because people said this about one what's the
one battle after another.
One battle. You have to see it in IMAX. Like, I'm sorry, if you need a caveat for why a movie is better or worse, because I don't like caveats for movies.
What a horseshit take. You don't think that there's a distinction between watching something at home and watching it in IMAX on a giant screen?
But you can't turn a bad movie good because you saw it in IMAX.
Well,
that's all I'm saying.
Okay, of course. All right,
I don't like caveats.
100%. So I want to hear it now. You hated one battle after another.
No, let's wait till recommendations. I got more. Just
But Ben, the scene where the roads went like this.
That was cool, but yeah, I'd need 3 hours for that. All right, so a million people emailed us about cheap TVs, and someone says that an ex-YouTube employee in their partnerships team, I hear about this a lot. There's basically a hidden revenue model where TV manufacturers get paid by Roku, Google, Netflix, and others for preloading the app, having the app on the button, all this stuff. So it's basically a revenue stream. I would have thought the cost would have outweighed that, but obviously the streamers, that's why you get cheap TV. And that's my point of why Netflix should give you TVs. Right?
Yeah, maybe one day. All right, so that was the story. It's being subsidized for us.
It's basically subsidized. If you on your remote now, you have Disney Plus and Hulu. You have the buttons, and you have preloaded with stuff, and the tiles are probably closer. You pay for so all this stuff is just we're being subsidized by the technology companies.
Thank you,
This
Amazon.
is a good thing.
All right,
I
email. When the topic of cars come up on the show, I think you both mentioned at various times that you both are leasing at least one of the cars in your family. I was wondering if you could both talk about your rationale behind choosing to lease versus buy. Leasing is often considered a cardinal sin among personal finance people. All right, here's my answer. I'm not a personal finance person. Boom. I don't care.
You know what? Honestly, my biggest reason is having little kids, you destroy your cars. And I am perfectly fine not owning for a while. I think when we're older, probably we'll start owning again. But I love the fact that I'm leasing it and my kids are destroying someone else's vehicle.
For me, variety is the spice of life. So I love every 3 years that I get to buy a new car or at least
I also like the fact that the technology is improving so much in cars that it gets better. So I think now is a great time to lease because every 3 years you get better self-driving capabilities, better sensors, and better technology.
Ben is more of a spreadsheet guy when it comes to finance than I am. I don't care if leasing costs me an extra $2,500 per lease. I just don't care. Like I enjoy if whatever it costs me, I like that I have the option.
Well, no, it costs you less, but it just costs you more in the long run if you were to buy it and then own it for 10 years.
Leasing is more expensive, right?
No,
over time.
The monthly payments on leases are way cheaper.
Oh, really? No, I'm just saying, like, versus the alternative of buying.
See, you're obviously not a personal finance guy. The owning gets you when you pay the car off in 4 years or 3 years, and then you own it after that, and you make no payment. That's where owning.
So buying and holding, or buying and owning over the long term is cheaper.
You know, here's the other reason that I like leasing. I hate paying for car repairs and dealing with that because I've had some lemons in the past. I love the fact that you buy a new car and it's fine for 3 years and then you turn it back in and you don't have to deal with a ton of repairs and such. And I've had so many cars break down on me over the years. And I saw my dad buy so many crappy clunker cars.
Yeah, make it somebody else's
break
problem.
Down immediately.
We got another question that I haven't thought about. We could say this for next week. What's one blindingly obvious improvement to a business that you, like a public business, that you can't believe they haven't done? I haven't thought about this, so we could save it for next week. This person's saying, like, why is Amex sending me like physical mail? Like they're wasting like $50 million a year on that, making that number.
That is really dumb. I don't know what the calculus is in that. Why you still receive so many?
I think maybe for financial stuff, it's regulatory.
Okay.
But, all right, recommendations. What do you got, Ben?
You go first. I'm gonna go last.
So last week we spoke about Sandler and Clooney, and here's a take. I'm bullish on more of this. You know how like some, maybe you see it in the NBA, like players in their later career, like coming together, like, oh, we're boys, like let's play together. So Billy Bob and Sam Elliott, for example, you've never seen them on the screen together, have you? I don't know, maybe you have. How good are they as a duo in Landman? Are you kidding me?
Billy Bob is fantastic in that show. Like there's some parts about that show that are like just a tiny bit cringe, but his performance, he's so good in that.
I think it's really remarkable that Taylor Sheridan is able. Now, I'm pretty sure that he's a very bright guy, that he's self-aware that it's intentional cringe.
Oh yeah.
But the fact that they're able to do intentional cringe that's not like so over the top, like it's hard to watch with like the stupid music and the dumb lines, like that he's able to thread that needle is.
My wife said the other day, I hope that they don't make the wife in that show go over the top like Beth in Yellowstone. Like she was like a character of her character.
She already has, no?
I think she hasn't. I mean, she's always been a little over the top, but she hasn't quite crossed the line yet for me. But Billy Bob is so good in that show.
Okay. All right. So yeah, The Shining was amazing in IMAX, and guess what? It's a good movie at home. Now I haven't seen The Shining. I don't know that I've ever watched it start to finish. I know I've seen the entire movie, but I don't think in one sitting. So there are two parts in particular that stood out to me that I forgot. One, like the music is the horror. Like the music was so freaking scary, even from the opening credits. So two things. Number one, I didn't realize that when Danny is on the tricycle riding around the house, So there's one part, there's 3 different times where he rides around the house. And one time he goes from the wood floor to the carpet, to the wood floor to the carpet. So it's like smooth.
Oh yeah. Okay.
And it plays so well. But they have, so the contraption, the technology for that is called a Steadicam. Like, how are they able to even shoot that? That's like the full body vest that they put on. So obviously, if you had somebody just with like a handheld camera running, it would be shaking the whole time. So it's like it's a contraption they put onto their body, and they put it on, and they're able to capture it that way. That's how they did the shot with like Rocky running.
Oh yeah.
You know what I mean?
Stable.
Where it's like,
yeah.
All right. The last part is when Jack Nicholson is banging down the door with an axe. So the camera like goes back with him. It goes back and forth and back and forth. So when he's swinging it backwards, the camera sharply rotates. So I put on YouTube, like, how did they shoot that scene? And it's like a selfie stick. The camera was on a selfie stick. So when he goes back, it goes this way. He like jerks it both ways. Kubrick did.
It's almost more impressive they did it back then. See, I watched that a couple years ago for the first time, and I'm more of a One Flew Over the Cuckoo's Nest guy versus The Shining, but I can appreciate like what The Shining was and did. It's just not my thing.
Okay. All right. So that brings me to this. As I've been mentioning on the show, I've been very into like old Hollywood books these days. The Diller and the Eisner and the Paramount stuff. So I was talking to our colleague Dan LaRosa, and it must have been in reference to this, but he goes, "You ever hear of Bob Evans?" And I'm like, "Is that a client?" Like, who he goes, the head of Paramount. I was like, "Yeah. Oh, yeah. Okay. What are you talking?" Yeah.
He was on the show about the making of The Godfather.
So
he
said Bob Evans had a great book called "The Kid Stays in the Picture." Read that. So boom, listen to it this week. Unbelievable. How did I listen to it so fast? It's 6 hours. It's down to 3 at 2x speed, and it took me an hour to shuffle my driveway, so I banged it up there. So there's one part in the book. Actually, you know what? You know what book kicked off my audiobook stuff? This sort of bring it full circle. It was Take the Gun, Leave the Cannoli. Or did I get that backwards? Leave the Gun, Take the Cannoli. The Making of The Godfather was the first audiobook that I listened to over the summer to get me into this.
Yeah, Bob Evans. You're right. That's old Hollywood. That book is amazing. I loved it. Great stories.
So Bob Evans ran Paramount, and in the book, Bob Evans is trying to cast one of his movies. I think it might have been Love Story. And he sees a kid in the corner. He goes, "I want him." And they're like, "Who?" Like, him. And the producer or whoever he was talking to, he's like, or the casting director, he's like, "No. That's he's an extra." He's like, that's not an actor. And he goes, "I want him." It was Jack Nicholson.
Right. The stories about him and Nicholson being friends, and also the fact that Steve McQueen stole his wife, and it's
unbelievable. And then okay, so lastly, I started watching The Offer this week.
Okay. It's a little long, but I like it. And the guy playing Bob Evans is really good. All right. So the new Knives Out movie came out. It's a third one. Did you watch it yet? It's called Wake Up Dead Man.
Not yet, but I'm very excited. Please, no spoilers.
No, I won't do any spoilers. So the first one I think is one of the best movies of the past 10 years. I'd give like an 8.5. The second one I didn't care for as much. It was entertaining, just not as good. And I'd give that like a 6.8 or something.
Is this better than that?
Yes, this is probably more like a 7.5. I really enjoyed it. It was fun. It had more of the DNA of the first one.
Okay.
And the cast is amazing. Daniel Craig, of course. Josh O'Connor, who's in the Challengers movie with Zendaya. He plays a priest. He's really good. I really like him. Glenn Close was in it. Josh Brolin, Mila Kunis, Jeremy Renner.
Whoa.
Andrew Scott, Kerry Washington, Jeffrey Wright, Thomas Hayden Church. The cast is unbelievable.
I didn't say no cast spoilers, but I did hear it's an amazing cast, but I was specifically avoiding the cast. But
okay,
wow, that is incredible.
But I really enjoyed it. And the way that they tie in a bow at the end, and I love Daniel Craig in this part, I had a lot of fun. It was very good.
Can I just say one last? So getting back to the, like, I'm not a prediction person. I feel like you can't watch Knives Out without predicting, because that's like the whole point of the movie.
Yes.
Right? Like
yes. And it's the way that they do it, the whole telling the story at the end is great. I watched Train Dreams on Netflix. This is Joel Edgerton. And
what is this? I've never heard of that.
So I would love to come up with a better word than this, because I don't use this word. This was a beautiful film. It was so good. It's just about a guy who who worked as a logger and built train tracks in like the early 20th century. And he falls in love and he loses someone. And this movie should win all the awards. I don't know if you would like it. I can't tell. It's just a very like kind of small, compact movie that has a lot of emotions. It's a little melancholy.
Is it 90 minutes?
It's probably 110. It's not long. It's like an hour 45. I can't believe how good it was for Netflix. All right, now I want to get to one battle after another. So I think it's okay to have strong opinions about movies. So Quentin Tarantino went on a podcast recently, and he just slaughtered Paul Dano in There Will Be Blood. And he said he's just a weak, uninteresting guy, the weakest actor in SAG, and he went to town on this guy. Okay? And everyone came to Paul Dano's defense. And I like Paul Dano. I think he was great in that movie. I think he's great. But if you read Quentin Tarantino's book, Cinema Speculation, or whatever it's called, he takes a baseball bat to like all these classic movies and says like, that was a terrible choice. This scene sucked. That actor shouldn't have been in it. That actress was terrible. Like he does not hold back. And I think we need more of that. I don't think we have enough of that today. And so here's what I'd say. One battle after another, it sucked. It absolutely sucked.
Finally a take.
There was no point to it. The plot, like, listen, it's going to win some awards because it was good acting. It was good cinematography, right? The scene at the end with the bumps, like, oh, that was cool. I didn't need to go to IMAX to see that. It sucked. It wasted a good performance with Leonardo DiCaprio. Benicio del Toro was a 0. Sean Penn was in a different movie. I don't understand the meaning of the movie. The best character was gone in 30 minutes. The mom at the beginning, she was the best character in the movie, but she was a very flawed character, and I didn't understand why she was a revolutionary but then left her family to not do the revolution anymore. It didn't make any sense. This movie sucked.
I love it.
I think people who say it's a masterpiece are crazy, and guess what? That's their opinion. They can have it.
I love it.
That's where I fall. It's the most overhyped movie of this decade, and it sucked.
I love it.
But I understand why some people liked it. How's that?
That's a take.
My personal opinion, just like Tarantino doesn't like Paul Dano, but I do.
Wow. Okay. So I liked it more than you did, but I love the take. We opened the show, Ben, talking about the sliding narratives and the twists and the turns. And one of the reasons why I just thought about this, why I really love reading the books about like movies and what almost happened with, I love trades in the NBA that almost happened. Like I love the fact that Tim Duncan almost went to Orlando, and thinking about the implications of what could have happened with the world that almost did but didn't. In Barry Diller's book, he talks about like almost buying a large stake is Duncan going nuts.
He said we need to make that a social clip of Ben going nuts.
I love that Barry Diller almost invested in AOL early, but didn't because somebody thought the price was too high. But like, had he bought 25% of AOL, the AOL Time Warner merger probably doesn't happen. And then like literally, who knows what happens from there? Right, like all the casting what ifs. Like I love
it. Is fun.
I love that stuff.
But I think it's okay to have strong opinions, and I feel like the people in the movie industry now, like the people who talk about movies, they just want to call everything a masterpiece because they're too scared to say what it really is. And I'm with Quentin Tarantino. Sometimes you have to give your opinions, even if people don't agree with them.
Well, it's it's so interesting because there's also like if you went into that movie without any outside interference, like literally, if you just said, I'm going to watch this movie. You don't know that Paul Thomas Anderson directs it. You don't know that the artists love it. You just say, I'm going to watch this movie. Your opinion would be different, right? But your opinion is colored by the opinions of others. So like, that's sort of how I felt about like Sinners. And I was like afraid to push back because like, I get it. It was like, there's a lot of great stuff, but like,
yeah, I like Sinners way more.
No. I like Sinners. I like Sinners plenty. But the top,
it wasn't a masterpiece.
Yeah, the over the top reaction to Sinners, to one battle after another, to all of these masterpieces. Like not everything's a masterpiece. And you're right, those are different because I like Sinners way more than I like one battle after another. But it is interesting to have the opinions of others shape our opinions.
And I'm sure it was better in the theater, but going to see it in the theater doesn't make that movie better to me. And people,
I can't imagine watching that at home.
You got to watch it again. And no, but dude, come on a 70-inch TV with my sound bar. I know the movie theater's better, but it's not that much worse. Anyway, that's my thought. I'm sure the film people will be after me, but bring it.
All right. Animal Spirits at thecompoundnews.com.
Hey, we will be here the next 2 weeks. We're going to make it happen somehow, some way.
Yeah.
We'll be here with you. We'll be with you for the holidays.
Animal Spirits at thecompoundnews.com. Thank you for listening. Thank you to the production team. We'll see you next time.